Kraken CEO Dave Ripley on the business implications of these new Bitcoin ETFs. And we're joined now by Anthony Pompliano, a founder of Pomp Investments, who actually invested in the exchanges early on, Coinbase, for example. But when you look forward now in the era of a Bitcoin ETF, is a business model like Coinbase's in severe threat, frankly, given the ETF flow?
Yeah, I think the public markets drastically underappreciate what these businesses are, right? So if you think about it, everyone knows the exchange business, everyone knows the custody business, but Coinbase has kind of quietly been transitioning into a Web3 or kind of crypto native revenue as well. And so they have this new blockchain base that's driving a lot of revenue. And so really what I think public market investors should be thinking about, whether it's Coinbase or other of these public companies, is go stack rank every single one of these companies by what percentage of the revenue comes crypto native. And the higher the percentage of crypto native revenue, the more mispriced they probably are in the public markets. And I think Coinbase is a great example.
Speaking of crypto native, you have kind of the ETF, you have other kind of stocks tied to the crypto industry, but then you have things that are actually decentralized, things that live in Web3, a word that we don't hear a lot anymore on these programs. Where is the value anymore as an investor? Do you start to look at more mainstream Bitcoin and the Bitcoin-related products that have attached to Wall Street, or do you look into Web3?
Well, I think it's all the same thing, right? If you really think about it, Bitcoin was the one that kicked off this entire revolution. When you look at the monetary competition, I think Bitcoin is by far the winner. Now there's going to be a big technology competition. And really, when you look at this sector, I think a lot of people want to put it in a separate bucket. But I look at this just as another macro asset that you can go in and you can invest in. And so what we have seen is young people specifically are putting their capital into this sector. This sector has outperformed drastically. Even with the recent pull down, Bitcoin is still up like 75% or something. And so I think that investors who want to have outperformance, they're going to have to allocate to this sector. And the ones that continue to fight it, they're just going to get left behind.
Anthony, I want to get back to the spot Bitcoin ETF discussion, but I have to ask you a little bit more about Coinbase. Obviously, had a great year last year, up nearly 400% or something like that. You take a look at the 2024 performance, down, 28% year to date. Is that a dip that you're buying?
So Coinbase, we've just held the position. And what I think really, again, it's the #1 regulated exchange in America. And so if you're bullish on this sector, you've got to be bullish on Coinbase. Another thing is they're the custody provider for many of these ETFs. And so in some weird way, they're almost taxing the entire ETF kind of trend. And so I think Coinbase will continue to be a leader. And overall, that's good for the industry. But I also think it's good for Wall Street, right? Wall Street doesn't just want to have a bunch of assets that are sitting there that they can't access if they're on non-public exchanges. And so having a stock like Coinbase that they're able to allocate to, I think is actually good for them as well.
I want to get a little bit philosophical here because I'm looking at your notes. You write about this new regime that this spot Bitcoin ETF approval is bringing about. Different investors, less volatility, more mainstream adoption. Less volatility, doesn't that just mean that Bitcoin trading is going to become less fun?
Definitely. I always joke that when the suits show up, the fun is over, right? and so to some degree, if you really think about what these new investors do, they have different behaviors, right? They rebalance their portfolios. Historically, what's the meme been? Hold, right? You don't rebalance.
Hodl.
And so on top of that, you also will see a lot of use of derivatives. And so there is a lot of capital that's going to flow into these ETFs. We're seeing that already. But when you start to see derivative usage, I think that some of that will pull away. It won't actually move the underlying. And so people just have to realize new investors, new behaviors, the days of 1,000% returns in a single year are probably over. The good news is that an 80% drawdown is much less likely. Doesn't mean it won't happen, but much less likely now that volatility dampens.
And you are indeed here in a suit today. You have Bitcoin ETF approval, but what about the rest of them? Do you think an ETF tied to Ethereum or another type of crypto asset could make as much sense?
This is one of my big bets over the next couple of years. So I think that the altcoin ETFs are going to be a massive area for innovation and also value to be created. We recently took one of our businesses, Reflexivity Research. We sold it to a Canadian publicly traded asset manager called DeFi Technologies. One of their subsidiaries, Valor, this is their whole strategy. Basically, go and find all of the altcoins that Wall Street wants access to, but they can't get access to, and create ETPs in Europe. And so we think that capital is going to flow heavily into the Bitcoin ETF, but it also is going to flow into all of these other assets.
But how do you parse what's real from the noise? And especially when you think about the SEC and the crackdown they have on so many of these tokens, on so many of these exchanges, how do you make a bet on any of them?
There's more nonsense in the public equity market than there's in the crypto industry in terms of these assets. And so when you really look at it, crypto is a free market still for many purposes. And so there's been a lot of clearing out, but the market has done that, right? When you look at the public markets, I mean, you guys cover almost on a daily basis someone doing something stupid, a company that said it was doing one thing and ended up not being successful. And so bad people will do bad things. Markets will ultimately kind of figure out who the winners are. But I do think that in this sector, there's a lot of people who have said, hey, there's no value there, right? Warren Buffett told me it's not valuable. But again, these assets have outperformed something like a Berkshire, and I think that people need to go spend the time to actually learn about it.
I want to talk quickly about stablecoins. Obviously, one of the big conversations in the crypto sphere over the past few weeks has been about Tether's reserves. Obviously, the CEO of Cantor Fitzgerald saying that he's seen them, they're there. Is Tether the stablecoin of the future?
So one of the interesting things about Tether and USDC was rising in adoption, but it's a regulated stablecoin in the United States. And so actually people internationally don't like that. That is a turnoff to them, is that there's now a coin that the United States government has a lot of oversight in. And so Tether has continued to see adoption go up. They are the 16th largest holder of US Treasuries. At this point, they are an essential part of the American financial economy.
So what does that mean for Circle then as it looks to IPO? Would you be a buyer in IPO stock?
I think Circle's an amazing business, and especially with high interest rates, they're going to continue to do very, very well. I think, again, I'm an American sitting on American soil, right? I look at these things very differently than maybe somebody does internationally. But again, we cannot discount. If you're the 16th largest buyer of US Treasuries at the same time that China, Japan, et cetera, is all buying Treasuries less, these things are going to become a very, very important part. And then also Tether, I mean, if you look at their numbers, right, it's one of the most profitable businesses on a revenue to employee basis in the world. And so instead of attacking these types of businesses, we should be looking at it and saying, how do we create more of these businesses? But next time, let's not let it happen outside the United States. Let's make sure that it's based here in the United States.
Anthony, this was awesome. Got to leave it there. Come back soon. That is Anthony Pompliano of Pomp Investments.